Don't spread the wealth? Come on now. I think that might be a little bit misleading. What are we really trying to do when it comes to our wealth and this infinite banking concept? In this book, we're going to dispel some myths and some half-truths. I mean, half-truths are still true, aren't they? Let's take a look. J. Dew's book review, boys and girls. Today, we are going to cover Don't Spread the Wealth, how to leverage the family banking system to own all the gold, make the rules, and enjoy generational riches. My buddies, Jason Lowe and Richard Canfield, up there, down here, we're with Uncle Joe. Up there, they're with Justin Trudeau. These two are Canadians in Edmonton, Alberta area, somewhere up there. They came out with this book this summer, 2024, and I got a copy from Richard, and he even signed it for me. So appreciate and shout out to those guys at Ascendant Financial and Wealth Without Bay Street, some of their media channels out there. I highly suggest you check it out. And of course, if you're in Canada, work with them to get started in your own family banking system. So what I wanted to do was recap this book. It was generally a pretty short read, just a handful of pages per chapter, and I read one per day for about a week or so before I finished it. I wanted to cover a few things here that they're saying about starting and continuing not just the product, but the message of the family banking system, how you can keep that money in your family, control all the wealth, and don't spread it around. We hear that mantra all the time, so this is a contradictory title reminding us that if we have our own family banking system, the wealth can stay with us. Because most people don't recognize the problem that's very important to talk about is your dollars are leaving you. Why do the poor get poorer? Why do the rich get richer? Those are the first two sections right there in the why of this book. Then the foundation of sustainability. Also the what. The what is part 2. Family financial noise, canceling headsets. I guess we all need to put those on. The family grocery business, coming straight out of becoming your own banker, and planning for windfalls and generational shifts. How does the money get from one generation to the next one? Does it just have to be at death or demise, or should it be throughout the life of the generations as well? Part 3 is the how. How to conduct your family banking meeting. So now we're involving the children, the spouse, all the other people who are in the extended family, like parents or maybe in-laws, into the family banking conversation. And then chapter 8 is where we will park for a little bit on this particular episode of our show. Dispelling misleading statements and half-truths about the infinite banking concept. So we'll get into it here in just one second, but I wanted to remind you that many of you out there, including myself, probably have gone on a search on the internet trying to figure out what is IBC, or maybe you've just heard it as infinite banking, and what is that concept? Jumping in here on page 6. It says, search infinite banking concept on any social media platform, and you'll find endless posts, infographics, and content makers trying to describe what exactly IBC is. You'll see financial advisors advertising their, quote, unique, end quote, design for a whole life insurance contract, immediately followed by financial academics claiming that IBC is a scam. So what is it? What's going on here? What is the infinite banking concept? Reminder, ladies and gentlemen, that the infinite banking concept, just like they say here in this book, is a process, not a product. A product is probably going to be whole life insurance from a mutual insurance company so you can earn dividends alongside of the guarantees. We're going to use that archaic, super old contract, that policy for the process of infinite banking. We're going to do something with this, and that qualifies as infinite banking. So if you think that it's a thing, you probably need to be more educated, and that's why we're here today. It's also important to realize what type of thing works best for that. But let's also be reminded, one thing that hit me is how wealth transfers are completely killing family members because most of their wealth and their accumulation of money over the course of their life is being just let out. It's being lost to interest, to traditional financial institutions like the bank, like the car dealer, like the government if you've got student loans, and of course, taxes. Those things are killing your wealth, and what infinite banking is going to allow you to do is keep the wealth. You're going to be able to not lose your dollars to those third-party entities because of this system. What if you could just have a system that allowed you to keep the dollars that normally flow out of your family to those traditional financial concepts that are happening out there? The concept that you need to pay your taxes, the concept that you need to finance and borrow third parties' money for cars or houses. What if you were able to build your own system to keep it? Most people have a hard time recognizing IBC because they don't realize how much money they're losing. And if they don't understand the problem, the solution doesn't make any sense to them. But most people who figure out, wow, a lot of money is leaving my family and it's gone forever, and this system keeps that money, retain the wealth, hold on to it, control it, be able to leverage it, well, then IBC is for me. Okay, but he's got a great list in here of all sorts of taxes that kill families. Look at these taxes that they put in here. This list of taxes, I'll only read a third of it. Accounts receivable tax, airline fuel tax, airport maintenance tax, building tax, death tax, cigarette tax, excise taxes, federal income tax, gasoline tax, food licensing tax, health tax, hunting tax, inheritance tax, liquor tax, luxury tax, marriage license tax, mortgage tax, property tax, poverty tax, real estate tax, retail tax, school tax, telephone federal tax. Just think about how much of your wealth is leaving you because it goes off to a very inefficient government, depending on what country you live in. It doesn't really matter. But those dollars, that volume of money is being lost from your family forever. Very interesting. I'd highly suggest this book, but let's get into chapter 8. Let's put them up on the screen here. Dispelling misleading statements and half-truths about the infinite banking concept. We're going to step on toes with this one, and we're going to dive into it right here. Number 1, you can buy an infinite banking policy. The truth, there's no such thing. We talked about this. Remember, infinite banking is actually a process. It's utilizing the product, hopefully whole life insurance, that is dividend paying, for the process of financing things and keeping those dollars with you. Why? Because you can leverage that policy and use the money that becomes liquid to you, cash value loans, for the use of paying those bills. And if you do that, you've got yourself a process. Let's pay back those loans you borrowed from your own system and the insurance company back into your controllable contract. That's infinite banking. We're going to use a policy to do so. That's a product. Love it. Number 2, $1 doing the job of $2. The truth, this is simply misleading. Well, I agree with them that it can be misleading if you pull it out right there. In the silo, your dollar going inside premium is not the same dollar that you're going to be able to leverage. Your dollars paying premium inside whole life insurance, cup number 1, by death benefit and that contract and that guaranteed obligation from the insurance company. Liquefying cash value. Cash value is simply what you can get to and leverage it. Of course, your dollars are still here. So I understand what they're saying. We try to show that off visually here with the Banking Bros, because if we do that, we think you can get it. So your dollars are still working for you while you let their dollars do a little work too. Number 3. Thinking about premiums as deposits. Okay. The truth, premiums are payments, not deposits. All right. Another common misconception is thinking of premiums as deposits. This is incorrect. Now, reminder, we have right here premium deposit as cup number 1 in our system. The red cup is got that word on it, deposit, because we're going to signify that this is a banking system, and a banking system mentally takes deposits. When you put dollars into your own banking system, or maybe your boss or your grandma does, it normally makes you feel good. So we want to help people with this visualization and using that word deposit. But remember, premiums are technically not deposits at all. This isn't a bank. Banking is now a verb and an action that we're going to do. This is paying premium. I love it, and I'm okay with that. So premiums are actually payments. All right, how about this one? Save earning 4%, borrow at 6%, and come out ahead. Oh, very interesting. The truth is, this is misleading. Okay, what they say, Richard and Jason, Saying you can earn 4%, borrow at 6%, and come out ahead is misleading because it oversimplifies the complex interplay of interest rates, compounding effects, and the time value of money. Well, I agree with that. What we're trying to help people understand, as this is a literal explanation, an example that we use for people, is that if your dollars are earning compounded interest and you're leveraging amortized loans, then there is a gap between how much you earned and how much you paid. But of course, in our example in the Save and Spend System video, we are acting as though those two things are together. They are very separate ideas, earning while paying interest. But if you have your own system that you're earning and paying interest from, you're able to grow your wealth and keep it because, of course, compound interest is more powerful and strong over time. You got to add in that time value of money while you're paying 6. If you're paying 6 on amortized loans, you're going to end up paying less in interest than you actually earned. So we hope we're not misleading you with that, but it's really cool for people to have their eyes opened on the fact that earning while paying at a higher interest rate is a pretty special thing if you understand where the money's going and who's getting it. Okay, our next one here, number 5, is you can get rich buying, and they have insert product here, buying cars or houses or something like that. Cars are often used in the infinite banking concept as the example because it's pretty universal and most of us have cars. We have a car example inside our Save and Spend presentation, but we don't say the actual phraseology, get rich buying cars. The truth, IBC is about controlling how you finance the things you need. We agree with that completely. Remember, this is the most proven system, and it's got the track record to do it by utilizing whole life insurance as your financing tool to keep the wealth. Remember, the problem is most of your wealth is leaving you through finance charges, through taxes, through wealth transfer at death, and of course, whole life insurance is going to help you retain that and control it while it's growing. It's a beautiful thing. So we're not here to say that you get rich buying something. We are here to remind you that you can keep from being poor by utilizing this as a financing system. Number 6, there is only one way to design a policy to implement IBC. The truth, this is absurd. What's interesting to me is the reason that these guys chose. The statement that there is only one correct way to design a policy and that any other way means the advisor only cares about commission is absurd. Well, I agree with that statement. I just thought it was an interesting way to put it out there. What's that one reason? That if the policy is designed a certain way with maybe a base or a PUA split or lack thereof, that is all about commission to the agent. That seems interesting to me. And I agree with them that it's absurd to think there's only one way to do it. Depending on the insurance company, depending on your health, depending on how much premium you're doing, or depending on what country you're in, the design of the policy has a lot of flexibility. And that's why working with someone who is an authorized practitioner of the infinite banking concept like us is going to be really helpful and beneficial to you. So we understand what your needs are in terms of money and financing. Then tell us your goals. What are you trying to do and what do you want to set up for the future? Therefore, we can utilize the policy in a way that is customized specifically and designed for you. If you get what you want and it's always guaranteed to grow, tax-free and cash flow, well, who cares about the commission or if it was designed the same way as the next guy? And number 7, here's the last one. Paying yourself more interest grows your wealth. The truth. More interest is just more premium. Now, I'm with these guys on this one completely, but I think the 3-cup setup is a great visualization of what's really going on. If we borrow against and leverage our policy, the contract that the insurance company must guarantee for our family, friends, church, and charity, we can get to cash value as liquid money today. And if we borrow that and go buy something great, we might take future income to pay it back. We've now returned the money that we used. That's borrow. That's replacing. This pool came from the insurance company. This interest that we would pay or typically lose to a third party actually goes in this cup. So, of course, we're not misleading anybody in the way we design and show the visualization. Because you can see right there that extra interest is premium. It goes inside cup number 1 as paid-up additions, only guaranteeing more death benefit and more cash value. That's what premiums buy. We have now utilized the policy without losing any of our original premium. We have bought the thing or financed the thing that we wanted. We've got that now in our possession. We put the money back with interest that goes inside cup 1. It's very easy to see why the 3-cup setup is the easiest way to visualize what's going on inside whole life insurance. Whole life insurance is the product. We want to get some from a mutual insurance company, but the process of becoming your own banker is still paramount. If you want to have a conversation about this book, we hope that you give us a buzz. Also, you can find it on Amazon, and give a shout out to my friends Jason and Richard for all the work they're doing in the infinite banking space. We're looking forward to a cash consultation, absolutely free, with you very soon. Gave a lot of game, we never got a lot of things. Bow your head and say the prayer. We taught you how to be the bank.